Okay, let's dive right in because we're tackling China's economy today.
Yeah, it's a big one, and a lot of people are wondering how it's all going to shake out, especially, for the rest of the world.
Exactly. And that's why you're here, right? You want to get a handle on what's been going on in China and how it might splash back here, right?
Exactly right. Cut through all the noise.
We're zeroing in on this new report, and honestly, it sounds like China's economy is hitting some serious turbulence. I mean, we're
Yeah.
talking deflation, a real estate market that's teetering, and a youth unemployment rate that's, well, pretty alarming.
Yeah, it's a bit of a perfect storm brewing. And, it's easy to gloss over these terms, but they have real-world consequences.
Absolutely. Like deflation, for
Yeah.
example. Explain that one to me. Doesn't that just mean things get cheaper?
Well, in theory, yeah. But the problem is that when prices keep dropping, people postpone their purchases. They think, oh, it'll be even cheaper next month. And businesses,
Yeah.
they hold back on investments. It can really put the brakes on economic growth.
Makes sense. And it sounds like investors are picking up on this uncertainty. This report highlights China's 10-year bond yields and how they're not looking so healthy.
Right, those yields are like a barometer for the economy's long-term health. And when those numbers start flashing red, it makes investors nervous. When we see yields hovering around that 2.5% mark, like they are now, that's a sign that confidence is shaky. People are hesitant to park their money there for the long haul.
Okay, so bond yields. Got it. Now, onto this whole real estate issue, because that seems like a big one for China. This report made it sound really dire.
It's a major pressure point. Think about it. Real estate touches so many parts of the economy. Construction jobs, materials, property taxes, it's all interconnected. When that sector takes a hit, the ripple effects are huge.
Yeah, and then you add in this whole situation with youth unemployment in China. This report cited a figure of over 20%, which just seems impossible.
It's a staggering number, and it speaks to some deep-rooted challenges. China's demographics are unique. You had decades of the one-child policy, which means you now have a generation facing a very competitive job market. And history tells us that economic hardship, especially among young people, can lead to, well, unrest and calls for change.
Okay, so we've got this potent mix of economic challenges, but China's not just sitting back and letting things unfold, are they? This report uses this term monetary bazooka, which sounds kind of scary, to be honest, to describe China's response.
Yeah, it's a pretty apt description when you think about it. They're going all in on trying to jolt their economy back to life. And they're using some pretty big levers to do it.
Okay, so walk me through it. What exactly are we talking about here?
Well, they're slashing reserve requirements for banks, which is basically like hitting the easy money button. It's supposed to encourage lending and get money flowing back into the economy.
So more money in circulation. Makes sense. What else?
They're also doing some pretty significant interest rate cuts, like trying to incentivize businesses and consumers to borrow more and spend more.
Right, because lower interest rates usually get people more comfortable with borrowing.
Right, exactly. It's all about stimulating that spending.
Yeah.
And then there's the whole injecting liquidity into the stock market. That one's interesting. Almost like they're trying to boost confidence or at least create the perception of it.
So it's this multi-pronged approach, but will it actually work? This monetary bazooka strategy. I mean, can it really get the job done?
That's the billion-dollar question, isn't it? I mean, these measures are dramatic, for sure, but whether they can fix the underlying issues in the real estate sector, for example, that remains to be seen.
So it's a bit of an economic experiment with potentially global consequences. And, that's really what I'm interested in. That's why this report caught my eye, because it made me think, okay, what does all of this mean for me, for my investments here in the U.S.?
And that's a smart question to be asking, because what happens in China doesn't just stay contained within China's borders. We live in a globalized world now, and these kinds of economic tremors, they definitely send shockwaves that we all feel.
Okay, so let's talk about those shockwaves. This report mentioned some historical data about how U.S. stocks, specifically the S&P 500, how they've reacted to similar situations in China before. What's the connection there? So this report claims that during China's last three major economic downturns, the S&P 500 actually went up.
Yeah, it's interesting, isn't it? It seems counterintuitive, but there are definitely historical correlations there.
Correlations, okay. But how does that make any sense?
Well, one theory is that during those periods, a weaker Chinese economy actually helped to lower global commodity prices.
No, okay, I see.
Which then might have benefited, U.S. companies, lower production costs.
Right, right. And that then gets reflected in their stock prices.
Exactly. So it's not always a simple, cause and effect situation.
It's never that straightforward, is it?
Rarely. It's all interconnected.
Okay. Now, this report also mentioned Bitcoin, which kind of surprised me. Is that something worth paying attention to right now, especially with everything else that's going on?
Bitcoin's interesting. It often gets caught up in these conversations about economic uncertainty.
Yeah, because some people see it as a safe haven asset, right?
Exactly. The thinking is because it's decentralized, not tied to any specific government,
Right.
it might hold its value even when traditional markets get a little shaky.
Okay, but isn't Bitcoin also super volatile? It seems risky.
Yeah, that's the trade-off. It can offer potential upside during times of, say, high inflation, but it definitely comes with a higher risk profile,
Yeah.
much more so than traditional assets.
So it sounds like knowledge is key here, right? Understanding what's happening in the world and how it connects to, my own personal finances.
Absolutely. Don't make any rash decisions based solely on headlines or, a single report.
Right.
It's all about gathering information from various sources and then making informed decisions that align with, your overall financial goals.
Your risk tolerance.
Exactly.
Well, this has been really insightful. It definitely gave me a lot to think about.
Good, good. Glad to hear it.
And to our listeners, hopefully this deep dive has given you a better understanding of all the complexities of the global economy
We only scratched the surface.
and how seemingly isolated situations can actually have these ripple effects that impact all of us.
In ways we might not expect.
Right. Well said. So stay curious, stay informed, and we'll see you in our next deep dive.